I'm telling you, this is often the kind of shifts that go on in the economy and in the business world that leave many of us behind and make a few of us rich. Capital One is the 9th largest bank in the country, and they've just acquired the 4th largest payment network in the country in Discover.
In this country, two of the biggest credit card companies, Capital One and Discover Financial, have agreed to merge in a $35 billion deal.
This is a pretty seismic shift in the financial and business world, and it can have ramifications for better or for worse a little bit down the line. So we're just going to have a conversation around this new acquisition, what our banking relationships look like with these institutions, who they typically serve, and how this can shake up the financial space and what this can ultimately mean for your pocket or for your wallet. So Capital One, as I said, is the 9th largest bank in the country. So obviously by that recognition, that would mean that them acquiring Discover makes this a pretty big deal. Capital One issues a pretty large plethora of their own credit cards, and now they're going to have their own payment network integrated under their umbrella. The closest competitor to this is going to be American Express. When you think about the other larger banks in the landscape, none of them own their own payment network at the time of this recording. And when you think about the largest payment networks, the only other one out of the major 4 that has a credit card company or a financial institution built into it is American Express. Visa and MasterCard are not financial institutions. They're pretty much exclusively payment networks, even though they have the larger market share in the payment network space. So who does Capital One and Discover, when you put them together, who are they serving? Typically speaking, Capital One and Discover serve a broad range of an audience, but they tend to target those who are somewhat in the subprime category or brand new to credit. This is kind of their base when you think about Capital One and Discover. And I want to make it clear as well that Discover obviously offers their own financial credit cards and financial services as well. They're not just a payment network, which kind of makes this an even bigger deal. So when you think about, or this acquisition rather, this is going to kind of shake up the financial space because this is going to create massive competition for a company like American Express, who offers financial services and a payment network as well. Capital One and Discover tend to lean towards the subprime market, those who are new to credit, students, etc. Do they also serve those who are in the prime market and beyond? They do. But when you think about the credit cards that Capital One offers, other than the Venture X recently launched in the last couple to few years, they really didn't have many credit cards that really catered to your affluent base of people. On the business side, when it comes to credit cards with Capital One, they tend to get shunned because they tend to report data on their credit card usage for the business side on the personal. So many of us who are looking to advance leverage and build financial relationships for higher credit limits and to expand financial capital, our access to financial capital, tend to shy away from Capital One because Capital One reports that data on the personal side, which kind of nulls and voids the value of having business credit cards in the first place. When you lean in on the Discover, they tend to be more like active small business owners, but they do have a lot of products and some of the best products when it comes to being new to credit, recovering from credit damage, subprime market, etc. When you're in that bracket, Discover tends to be a really good company to work with to get yourself set up financially, to get your feet underneath you. There's also important context to understand around the investment opportunities. If you happen to own stock in either one of these companies, this acquisition can be a big deal for you if you own stock in this opportunity, meaning that this could be a situation where their stock valuations could increase. You also have to think if you own Discover shares and Capital One's acquiring, there's going to be a swap on shares. So it's important to understand these different things when they come up, because unless you're deep in the financial space, studying and doing your research, this kind of headline is not going to be front and center for most of us to be involved in and like to be able to make the financial moves to benefit from these things. Where is this probably headed? Well, when you think about American Express as probably the closest competitor, tends to lean towards emerging affluent clientele base. Do they have products and services for those who are in the subprime market? Yeah, to a degree. When you get into their checking account and some of their baseline credit cards, these can be attained by people who don't have the best credit in the world or are brand new to credit, and as well as the financial system as well. American Express is going to shine in this arena. So when you think about this acquisition, will there be overlap, or how would this affect from a competitor's point of view? What does this look like for your banking relationships and your finances if you're tied in with these different institutions? Capital One and Discover, first off, that acquisition is going to take very significant amount of time to even roll out and be relevant in the financial space. We could be talking years. When you start talking about two behemoths like this coming together, there's a lot that has to be undone and a lot that has to be tied in before they can start rolling out new products and making a major adjustments and shifts. So I don't expect much in the next year to 2 years from this acquisition. I expect American Express is going to make the necessary adjustments based on the threat level they see this to be, but honestly, the clientele basis. So my personal experience with American Express, if you've been following this channel, you know I have a very strong relationship with American Express that's growing on a consistent basis, and they're one of my primary financial institutions on the personal and small business side when it comes to banking, financial services, and acquisition of capital and credit, the exercising of leverage. It's the same thing on the other side with Capital One and Discover, where I have a strong relationship with Capital One, but I'll be completely honest, Capital One has not served me very well in that relationship. And I don't have a relationship at all with Discover at the time of this recording. I had one years in the past. I defaulted on that obligation years ago. It's probably going on 10 years now. Paid it off, recovered from it, and kept it moving because Discover was another institution that for me and what I'm trying to accomplish didn't really serve my needs. I tie in best with institutions that allow me to grow with them and outgrow Discover very quickly, as I did once I recovered my finances years ago. Capital One, they're really challenging to grow with from my experience. And I've seen other content creators and others in the finance space speak on how challenging it can be to grow with Capital One. Not to mention, they are not going to be the most attractive institution for what it may take to grow with them. The return on investment is limited, meaning that the type of relationship you'd have to have with Capital One to get access to, lines of credits, loans, and high limits, you can take to another equivalent level institution and get much better results and have much more growth potential. So my personal experience, I haven't even tried it with them on the business side. On the personal side, I have a couple credit cards with them. If you're looking to optimize credit card rewards points, Capital One is a very decent institution to bank with and to get your credit card relationship with. The Saver One, the Venture X, these credit cards are pretty solid. If you're looking to optimize credit cards in itself for points rewards and travel hack and that kind of thing, then Capital One is a solid institution. When you start to talk about optimizing leverage, which is more where I'm focused at, I don't value credit card rewards points and travel hacking to that extent. I will have a negative return on a credit card with an annual fee that's high that I might not be getting the rewards points to justify. I don't really care about that if that credit card is serving me with higher limits, access to capital, expanding my banking relationship with an institution that's going to help invest in my business and help me to grow in that arena. I don't really care about the points. But if you do care about that, that's your primary focus, then Capital One is pretty solid. If you're more like myself, who's in that emerging to bridging into the affluent class, where you start to have real financial needs, your financials are in a place where you can bank anywhere and get quality results from them and get access to capital. So now you're fishing for the highest limits. When you're in that arena, when you're mastering leverage, when you're mastering access to capital like I'm doing, at that point in time, that's when you're going to bridge away from the Capital One and Discovers. And those of you who know, when you're at this point in time where it's like, I need access to multiple credit cards at $10,000, $20,000 limits a piece, I need to start building out my business credit profile, and I need it to be completely segregated from my personal profile for the most part. When you start to say I need lines of credit, when I need to expand and get, term loans, etc. for my business, this is where you're going to bridge away from the Discovers and the Capital Ones. You're going into a space now where you need a bank that's going to accommodate you on a level that allows you to grow years down the line. You don't want to have to build with an institution. You got to rip up that infrastructure and start somewhere else in the middle of your business operation. Trust me, when you start to have a real business operation, even when your personal finances really start to grow and develop, you own a home, maybe you own real estate, you're deeply invested in the stock market, etc. When you start to have real finances, you do not want to have to worry about reaching a ceiling with a financial institution and having to pick up all that infrastructure and move it over in the midst of your investing, in the midst of expanding your banking relationship, in the midst of expanding your business banking relationship. You want to be with an institution that you can see future with 3, 5, 7, 10 years down the line. Capital One and Discover, extremely limited in that capacity. So I don't expect this acquisition to pan out into anything in the near future. Capital One has a basic checking account for me. I have a couple credit cards with them, mostly because they were at the foundation of my credit building journey, so I'm not interested in closing those. But I have no growth projections for Capital One, and I have no interest in Discover. American Express, Chase Bank, Truist, somewhat Navy Federal, these different institutions have my future buy-in because that's where the growth potential is for me and has been already for me. And that's, again, coming from 6 figures and access to capital on the personal and business side. I just don't have time for the limited growth potential with the wrong institution. So this acquisition is important because I believe that American Express, for instance, is going to make their adjustments, and they may start to solidify their base more and come out with products and services to make sure they're competing in a healthy arena. We want to be looking out for these opportunities. But other than that, to be honest, this acquisition, unless you're investing in the stocks in either one of these companies, not something that I feel like is going to make a big blip in the near future. We just have to keep our eyes open down the line. So I just wanted to have a quick conversation about this because these are the type of shifts that we get left behind on if you're not paying attention, and need to have these dialogues to ask ourselves certain questions, why these things are relatively fresh fresh. So if we need to make adjustments, we can make them before we lose out or miss out on anything. So all my pioneers, welcome back. To my new viewers, welcome in. I want you guys to comment down below and let me know, do you have an existing relationship with Capital One? Do you have an existing relationship with Discover? Is this acquisition gonna make a big difference to you? And if so, what adjustments are you gonna make? Let's just keep the conversation going so we can talk about these opportunities and continue to build our finances around these shifts in the economic market and the business world. Other than that, I want y'all to stay focused, stay in motion. I'll see y'all soon.